Guys, good day. How are you guys doing? Hope you guys were fine. Don't forget to subscribe and the one at Sadiq. Also, if you call me Bright. In this today's lecture, I want to teach you guys what are we calling Bolinger pants. What's Bolinger pants? Firstly, let me explain the two things about Bolinger pants for you. Bolinger pants it is an indicator used to measure when market volatility of a coin. That is, we used to measure market volatility of a coin or to tell us whether a coin is overbought or oversold. I'll teach you guys what overbought mean and what oversold mean. Firstly, if you want to set your Bollinger Band indicator, you will come to this indicator place. Click on indicator. Bollinger Band is this BOLL. Click on it. Save. Yes. I want to teach you guys two things here. Firstly, in Bollinger Bands, we have upper band, we have lower band, we have moving average band. You see this line down here, we are calling it lower band. The one up here, we are calling it upper band, while the one here, we are calling it moving average line. Yes. How do you use moving average to determine when to buy long and when to buy short? Firstly, number one, when the bands are far apart, when this band, this moving average band, when it's far apart, that means the volatility is high. And then when the bands are close to each other, that means the volatility is low. What is volatility? Volatility is the high, the way the coin is moving up and moving down. That is the volatility. That means when this this line is far apart, that means the volatility of the market is high. But when it's low, look at this place, you see that the line is close to each other. That means the volatility of this market here is very low. But look at when it's reached here, the volatility is high. That means the volatility of this market. And then if you can see the way the market move from here to here, you will see that the volatility of the market is very high there. And then let me give you trick for you to know when to enter for long or when to enter for short here. When the candlestick shoots out of the upper bands, it is overbought. If it shoots out of the lower band, it is oversold. What did I mean? You see this place, you see this candle, you see this line, you see these ticks, it already shoot out. You see these ticks, it's already shoot out of these bands. That means at this time, this coin has already overbought. If you are buying this coin here, it's like you want to risk your money. Because these candlesticks have already shoot out the upper parts. That means the coin have already overbought. Whenever you see Bollinger Band and the candle it shoots out of the upper band, that means the coin is already overbought. Don't go for long trade that time. Go for short trade. And then whenever you see the lower bands, you see that the candle it shoots out the lower band here like this. The candle is below the bands is below the candle here. That means the coin is already oversold. You can buy the coin at this time. And then you see it here, a lot of people bought it here and it went up. It went up. Same thing happened here. You see the candle, you see the bands, it's below this candle. That means whenever you see the line here below the candle, that means the coin is oversold. You see when it's here, a lot of people bought it and it went up again. And then when it reached there, what happened? It shoots out the upper bands. Like I told you, that means a lot of people sold it here too, and it went down a little bit. When it reached there, what happened again? It shoots out the upper band again, and then it went down. That is what we call Bolinger bands. That means when the coin, when the when the candle it shoots out the upper bands of Bolinger band, that time you have to go for short trade. And then when it's below, whenever you see the Bolinger band below the candlesticks, that means it's telling you to go for long trade. And then if these bands are too expand, that means the trend is changing. You can see it here, the bands close to each other and it's moving up down. What happened when the band expanded? That means the market changed. The market went bullish. That is what the bands is telling you. Whenever you see the bands expand, that means something is happening in the market. The market is already changed. But let me give you a little piece of advice. Don't use the Bollinger Bands indicator alone to determine entry or exit point. You have to combine the two or three indicators. That is why I'm teaching you guys how to use indicator. And I've already teach you guys moving average indicator, monthly indicator. This is Bollinger Bands. In my next lecture, I'll teach you guys how to use related strength index, which is RSI, to know when to go for long, when to go for short. By the time you combine three indicators together, you will get the perfect entry for a trade without not losing any money in the market. Thank you guys. I'm still remain Latif Sodi. Have a nice day.